Who does not like sweets? I think every one of you. Let's dive into the fascinating history of one of Austria's most beloved confectionery brands, Josef Manor. From its humble beginnings as a small store in Vienna to becoming a household name, the story of Manor is nothing short of inspiring. So, sit back, relax, and join me as we explore the sweet success of this iconic chocolate manufacturer. The success story of the confectionery manufacturer began when Josef Manor, a trained merchant, opened a small store in the heart of Vienna in 1890, where he sold high-quality and reasonably priced chocolate products. As Josef Manor did not have a supplier who could deliver the desired chocolate quality, he decided to produce his own chocolate and thus bought the concession, premises, and equipment from a chocolate producer in the 5th district of Vienna, and was thus the owner of the Josef Manor chocolate factory on the 1st March of 1890. Due to the very fast great success, the company was to expand already in the founding year, and already in 1890, more than 100 employees were working in the company. In 1898, the legendary Manor Schnitt was introduced, which was sold at that time under the name Neapolitaner Schnitt No. 239. The Manor Schnitt owed its name to the size of the packaging and the origin of the hazelnuts used for the spread. The hazelnuts came from the then fabulously described region of Naples. Due to the rapid success of the company, Josef Manor decided to take a partner into the business. This partner was the accountant Alfred Teller, who joined the company already in the 3rd business year, and his shares were transferred to his brother-in-law Johann Riedel in 1900, thus laying the foundation for the cooperation between the Manor and Riedel families. Under the management of the two entrepreneurs, the success of the company increased continuously, and the Hernals factory thus had to be expanded from 1904 to 1913. However, since the number of orders increased faster than the construction, production even had to be carried out on the building site. In 1913, the time had finally come for the company with 3,000 employees to go public under the name Josef Manor Comp AG. After the Second World War, Josef Manor died on the 5th May of 1947, and thus he was not able to experience the new beginning of Manor in the late 40s. In the course of the years of the economic miracle, Manor became internationally successful. In 1964, an innovation in the packaging of the Manor Schnitt made it the largest item in the entire range. In 1970, the company merged with the second largest Austrian confectionery manufacturer, Napoli, Regendorfer and Company. As a result, the Casale and Napoli brands were added, and the assortment was expanded with Casale chocolate bananas and Napoli Draghi Keksi. Finally, in 2000, the company Victor Schmidt and Sony Gem with the brands Ildefonso and Victor Schmidt Austria Mozartkugeln was added. And so, Josef Manor Comp AG became the company we know and love today. Now, more over to the analysis. The shareholder structure of the company shows that the Manor Foundation is the largest shareholder with a share of 49.3%. This share gives the foundation strong control over the company and its decisions. Hans-Peter Andres, PhD, holds a 24.0% share, which gives him significant power to influence decisions within the company. The Manor family holds a 10.4% stake, which means they have a significant interest in the company, but do not own enough shares to have any real influence on decisions. The rest of the company is in free float, which means that the shares are held by many different investors who do not own enough shares to have significant influence on decisions. Dimensional Fund Advisors ELP only holds a 0.46% stake, which is very small compared to the other shareholders. This shows that the company is not heavily held by institutional investors, and that control of the company is largely in the hands of a few shareholders. Overall, the shareholder structure of Manor is quite concentrated, and control is held by a small group of shareholders. This can lead to decisions being made quickly within the company, but there can also be concerns about the diversity of opinions and interests. Manor's valuation is currently above our fair price estimate of €27.72. This means that the company is currently trading at a premium that is higher than the actual value of the company. The difference between the current market price and our fair price estimate may be due to various factors, such as an overly optimistic assessment of future earnings or a generally high valuation of companies in the sector. This fact may mean that potential investors should be cautious when it comes to investing in the company, as the price may not reflect the actual value of the company. On the other hand, the company may be able to increase value in the future and justify the current valuation level. Our estimate of Manor's fair price is significantly lower than Manor's current market price. This means that the company is trading at a discount that is below the actual value of the company. The difference between the current market price and our fair price estimate can be due to various reasons, such as a poor assessment of future prospects or general pessimism about the industry. This situation may mean that the company may currently be undervalued and offers good investment potential. Potential investors may consider investing in the company as the price may not reflect the actual value of the company. The company may be able to increase in value in the future and justify the current valuation level, which could potentially increase the value of the stock. Likewise, there are other valuation methods, but on average they are also much lower. Thus, it can be assumed that Manor is highly overvalued and the share price is built on fantasies. Manor has a large one-time gain of €768,000 that impacts the last 12 months ending of June 2022. While this is positive news, investors should keep in mind that this is a one-time gain that may not be repeatable. However, if the company's results are distorted due to this one-time gain, it may be difficult to get an accurate idea of the company's financial performance. Investors should therefore carefully consider how this one-time gain affects the company's overall picture before making an investment decision. Currently, Manor has a net profit margin of 0.8%, which is down from 1% last year. This could be due to various factors, such as higher costs or lower sales. A lower net profit margin may indicate that the company is having difficulty reducing its costs or increasing its costs, or increasing its sales. This can have a negative impact on the company in the long run. Investors should therefore carefully examine why the net profit margin has fallen and whether the company is taking steps to reverse this. Manor has experienced negative income performance minus 9.4% over the past 12 months, which makes it difficult to compare it to the food industry average 10.3%. This suggests that the company may be struggling to keep up with its competitors, or that the competitive environment is becoming increasingly challenging. Investors should therefore carefully consider whether the company is able to improve its revenue performance and whether it is able to keep pace with its competitors. A strategy to reduce costs or increase sales could help boost the company's income and improve its financial performance. Return on equity is an important indicator of a company's efficiency in using its shareholders' capital. A low return on equity may indicate that the company is not able to generate an adequate return for its shareholders. Investors should therefore carefully consider why Manor's return on equity is low and whether it is taking steps to improve it. A strategy to increase profitability could help restore shareholder confidence in the company and increase the share price. Manor's current assets of €72.6 million are insufficient to cover its current liabilities of €73.6 million. This means that the company may have difficulty paying its current liabilities as it does not have sufficient cash to meet its obligations. Non-current liabilities. Manor's current assets of €72.6 million exceed its non-current liabilities of €39.2 million. This means that although the company should be able to settle its current liabilities, it may have difficulty meeting its non-current liabilities in the future as it has fewer cash and cash equivalents available for its long-term obligations. Manor's net gearing in relation to equity 106.4% is considered high. This means that the company has a high level of debt in relation to its equity, which may represent an increased risk for investors. Manner's debt-to-equity ratio has decreased from 144.6% to 110.7% over the past 5 years. This shows that the company has been actively working to reduce its debt-to-equity ratio, which can be a positive signal for investors. Manner's debt is not well covered by operating cash flow 13%. This may indicate that the company may have difficulty servicing its debt if its operating cash flows are impaired. Manner's interest payments on its debt are well covered by earnings before interest and taxes. It's a 3.1 times coverage. This means that the company should be able to service its interest payments from its earnings, which may be a positive sign for investors. Over the past 5 years, the company has experienced an annual profit decline of 11.9%. The company's debt burden exceeds its operating cash flow and cannot be fully covered. In addition, the company's shares are very illiquid due to a lack of trading activity. The valuation level, in contrast to peers and the industry, is very high, and the fair value is much lower than the current share price. In the past, Manner Ag has also been seen to underperform other stocks in this industry sector. In conclusion, our analysis suggests that Manner Ag may not be a suitable investment for those looking for long-term growth and stability. The company has experienced an annual profit decline, and its debt burden exceeds its operating cash flow. Additionally, the lack of trading activity and high valuation level compared to peers and the industry are concerning factors. Past performance has also shown that Manner Ag may underperform other stocks in the same industry sector. Therefore, it's important for investors to carefully consider these factors before making any investment decisions.